Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning. Friday, August 12th, 2022. We are bid this morning out there in equity land. Equity futures are in the green area, pretty not robustly, but modestly. I think much to the bears' chagrin. I think people were thinking this would be a down day. Still could be. We'll see. Interesting notes. Bank of America gives their flow updates for last week. U.S. equity saw $11 billion in inflows, largest inflows in technology in 8 weeks, largest in U.S. growth funds since December of 2021. Bonds, $11.7 billion in inflows. Now, if this is the ugly bear market people fear, this would mark the perfect time to watch all that new invested capital incur losses. We shall see. Next week to be a very important week in this market if today is just kind of a ho-hum day. So far, we've defied, not necessarily delayed, defied the pullback expected by many, including myself. If we do keep chugging along, the work I show technically shows 433 for the SPYs to be the next level of significance and resistance. That also, by the way, corresponds to the 200-day moving average. So I'm getting that signal from two different methods, 200-day itself, but also some work I do with DeMark. Shows 433 as the next resistance point. So that'll be interesting. If we do, we very well may get right up there and fall back. If we do go up to that level and break through it with authority, that will be absolutely huge in terms of people that really are not invested or underinvested, and just the FOMO trade is going to regain, I think, a whole new life. I think that'll be fireworks, honestly. So we'll see. Dollar on kind of the not so great news, the dollar is regaining some footing back above 105 on the DXY. Gold up modestly as well, which is a little puzzling and interesting, but I mean, modestly, it's not up much. Gold still holding that 1800 level. I did trim exposure there yesterday, just not trusting sad gold. We'll see. I still think it might be a little early for that trade, but we're still there a little bit on the GDXJ. Energy taking a breather down a little over 1% on WTI and nat gas. So nat gas has come up a little bit more recently. UNG is actually bid this morning. I see it up almost 1% pre-market, which maybe maybe my future feed is wrong, and I'm looking at the historic and not the forward future. I don't know, but that is interesting. We did increase exposure to nat gas yesterday. Just on the overall thought, as we go into heading closer to winter, I don't think Europe's going to get anywhere near filled on what they're going to need for the winter in terms of nat gas for their storage. I just think it's going to be a tough grind. So I think I don't know. I still continue to like natural gas here. I think it has the potential to go higher. Bonds are bid a bit, and all this is opposite from yesterday. Because yesterday you had the inflation trade, you had energy working, you had bonds, you had rates up, bonds down, you had the dollar weak, but now it's kind of the opposite trade. You got a little bit more risk on, you got the dollar creeping back up, and the energy space and the commodity space is taking a little bit of a break. So themes working so far. Just to go over it real quick, we've talked about a lot of this fairly regularly. Med device, continue to like that space. IHI is an ETF to play that. We also own Intuitive Surgical, ISRG. Defense, I think, still works. We own Lockheed Martin and Raytheon. Select Industrials and I mean select, but like Honeywell, where you've got drivers of emerging aerospace back on the come with Boeing getting their production back ramped up. That's great for Honeywell. They also have a very intense, very large software business that is just more secular and sticky than it is cyclical. So continue to like that one. Not adding to it here, it's because I'm not totally on board yet. Also, in terms of natural gas, we did talk about that a little while ago. Increasing exposure there. Names we own there are Devon, Antero Resources, AR, and Chesapeake CHK. But I think you got to keep a close eye on interest rates right here. I think that as rates start to tick up, especially on that 10-year, if that gets to close to and above 3%, market's not going to like it. Didn't like it before, probably not going to like it again. Take it as a sign that inflation is not being tamed, that there's still a lot more work there to do. So keep a close eye on that. And for those of you that care about Rivian, the one number I would take a look at there, I was actually looking at it for a potential long, like the product. Feel like they're doing well. Feel like if anybody can give Tesla a challenge, they've actually had a proper looking pickup truck instead of the Cybertruck. But 98,000 is their order book versus 90 last quarter. That is not liftoff type numbers. So there's still a long way to go for those guys. Still, they have plenty of cash, so they've got the runway to do it. But that's not the ramp you want to see. You want to see much more sequential build in that backlog. Okay, that is it. Have an awesome weekend. We will talk to you on Monday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, Grinnellcapital.com.